Well, hello, and welcome to our 2021 Investor Outlook. And we're going to get started right now. I'm John Williams, the owner and advisor at Ironwood Wealth Management. Today's agenda will be very straightforward. First, we'll share with you a review of the equity markets. Then we'll discuss a 2021 outlook for investors. Before we begin, I think it's always important to review the fact there are 5 key areas of financial planning. They are preservation planning, retirement planning, tax planning, estate planning, and investment planning. We try to consider the impact of any recommendation we make not just on one of these areas, but on all of these areas for our clients. Today's presentation will be primarily focused on investment planning and the equity markets. As a quick review, the U.S. stock market ended 2020 at an all-time high. After a significant drop and the quickest downward decline of the century in March of last year, which was fueled by the largest federal government stimulus ever, historic support from the Federal Reserve, and optimism about how quickly the economy is likely to bounce back, the S&P 500 stock index finished up for 2020 more than 16%. The fact that a pandemic-induced economic shutdown of pretty epic proportions was absorbed by investors and the year still ended with stocks at a higher level is quite historic. In March of last year, investors saw stocks dropping 34%, starting a bear market. That bear market turned out to be the shortest downturn in U.S. history. Since the U.S. stock market bottomed on March 23rd of last year, the S&P 500 has risen 68% at the end of 2020. That shattered all-time records along the way. Clearly, investors who stayed the course were rewarded. While equities climbed higher from their March lows, not all stocks recovered to positive territory. In fact, if you analyze the year-end market highs, gains in companies like Apple, Amazon, and Microsoft alone accounted for more than half of the S&P 500's 16% total return for 2020. Just as interesting, if you remove the top 24 performing companies that are dominated by tech and digital services, the S&P 500 return for the other 476 companies would have actually been negative in 2020. Interest rates were not a lot of help for income-type investors last year, and they've started 2021 at or near historic lows as well. Federal Reserve Chairman Powell announced again at their December meeting that interest rates will stay close to zero for the foreseeable future. Congress also acted aggressively, approving $3.5 trillion in emergency relief and stimulus measures in 2020. This was the largest action in the face of a recession in U.S. history that has provided some of the biggest aid packages in the world. Entering 2021, as this chart shares, interest rates are 0.09% for the average bank money market and 0.16% for the average 12-month certificate of deposit. Both of those rates, clearly less than 1%, can be very unattractive to income-seeking investors. Perhaps nothing has been more puzzling to many people than the disconnect between the equity markets and the economy. The market's rebound reflects Wall Street's optimism about the prospects for 2021, but it also accentuates the disconnect between the stock market's wild success and struggling American households. Wall Street is at an all-time high, but many places are still experiencing shutdowns, high unemployment, overrun hospitals, and economic hardships. Sadly, many local businesses like restaurants, gyms, and small shops may never recover. Everywhere we look, we are reminded there is a deadly pandemic responsible for many deaths and has also left millions jobless. In fact, as these statistics share, at year-end, COVID-19 daily cases, deaths, and hospitalizations were all peaking at their highest levels. There is great optimism, however, in the equity market about how quickly the economy is likely to bounce back in 2021 as the coronavirus vaccines become more widely distributed. Investors are focused on the future, and the stock market is priced as a forward-looking indicator. Also, stocks remain appealing for many investors because interest rates are so low, making equities more attractive than other asset classes such as fixed income. Our goal is to make sure that your investing plan is centered on your personal goals and timelines. For 2021, we believe caution is still the principal notion for investors. Moving on, let's turn to a 2021 outlook. We begin the year with a new administration in Washington, D.C. One of our jobs as financial professionals includes reporting and analyzing political activity and relaying how the new administration could impact the investment world. While all changes will need to be monitored, some specific things that need to be watched include future stimulus, potential tax increases, vaccine distribution success, and trade agreements with key international trading nations such as China. Some investors are wondering how the first 2 years of a Democratic presidency, House of Representatives, and an evenly split Senate has tended to affect equity markets. Well, while history is nice to look at, please keep in mind it's never a sure tell of the future. However, during 10 previous periods of similar circumstances dating back to 1949, 8 of the 10 were positive for that 2-year period. For 2021, everyone should be carefully monitoring public policy and the new administration. So what are analysts forecasting for 2021? Well, the stock market enters 2021 with a pretty favorable outlook. Barron's recently surveyed 10 market strategists and chief investment officers at several large banks and money management firms. Their average year-end S&P forecast for the year ranged from 3,800 to 4,400. If you add a dividend yield of nearly 2%, and if their forecasts are correct, of course, U.S. stocks could return a total of about 10%. This panel also predicted that the U.S. economy will grow by 5% in 2021. If true, that'll be the fastest rate since 1984. That would be very healthy following a year in which gross domestic product declined by a very healthy 31% in the second quarter as the pandemic took hold, and then later soared by 33% in the third quarter. While this forecast is optimistic, we like to remind that we always try to consider feelings about risk and the markets when we review situations and make recommendations. There is great optimism about how quickly the economy is likely to bounce back as the COVID-19 vaccines become widely distributed. However, keep in mind, for 2021, there are still many uncertainties. Major risks include potential damage that could be done if this massive vaccination campaign in the U.S. doesn't run smoothly or as quickly as investors or the markets are expecting it to. There's also still a major risk to the economic outlook if the recovery is delayed and corporate revenues and profits end up falling short of expectations. 2021 should be another interesting year, and our goal is to continue to communicate with clients on how things are unfolding. As a quick recap, please remember, 2020 was a year that rewarded discipline and patience. Interest rates are at or near their all-time low. There is a disconnect between the economy and the equity markets. A new administration may bring new challenges, and the effect of the COVID-19 situation is still critical for investors. Also, caution and vigilance, in our opinion, is still critical, and you should focus on your own personal goals and objectives. And as always, call us with any questions or concerns. Legendary portfolio manager Peter Lynch reminds us that you get recessions, you have stock market declines, and if you don't understand that that's going to happen, then you are not ready and you won't do well in the markets. So what can you expect from us? Well, one of our main focuses is to review changes for our clients on an ongoing basis. You can also expect regular communication, frequent discussions, and you can expect that we are continuously reviewing economic, tax, estate, and investment issues for our clients. In fact, we plan on offering other workshops soon that focus on tax changes and other planning ideas. One of our goals this year is to continue to help others. Over the years, many of our clients were referred to us by other existing clients. Did you know one of our goals in 2021 is to continue to help others? Over the years, many of our clients were referred to us by existing clients. So please let us know if you have a friend or a coworker that you think could benefit from this important video or any other valuable information that we are regularly putting out. Remember, at our firm, clients come first, and your health and well-being is a high priority. I want to thank you very much for watching our update, and I hope you stay safe and healthy. As always, we sincerely appreciate the trust and confidence you have placed in us. We'll see you next time.